Oil and gas markets are facing the divergent evolutions. Oil's twilight as an industrial fuel continues, and its use becomes even more concentrated in the transport and petrochemical sector. Gas, on the other hand, continues to increase in power generation as well as industry and space heating. What the two markets do share, however, are a number of key future changes, including the uncertainty of economic environment, as you are quite well aware, the need for sustained investment in new supplies, devising strategies for improving end-use efficiency, and the need for broader and deeper data on both markets to allow investors in both fields to better plan for the future. On the one hand, oil markets have seen surging demand growth in emerging markets. On the other hand, demands for natural gas has recovered to well above pre-financial crisis levels in most major regions, but unconventional gas revolution and ample LNG supplies have led to different supply and pricing patterns at the regional level. In both oil and gas, we see a notable dichotomy between non-OECD and OECD markets, with demand driven by China, India, and the Middle East. But nonetheless, demand growth is dominated by emerging markets, especially China. In terms of supply, this is not about an inadequate resource basis for either oil or gas, but about timely and adequate investment. Project lead times remain stretched, and investment has to match not only increasing demand, but also the sizable volumes of productive capacity lost every year due to mature field decline. From a demand perspective, continuous economic recovery should bring renewed demand growth concentrated in the non-OECD countries, but the projected level of demand growth is not set in stone. We need to mention data and the importance of improvements in both oil and gas market data if we are to genuinely understand what the future may hold.